All right, welcome back. Welcome back. This is the Intelligent Developers, led by Andre Bueno and Gerard Delane. And today we have a fantastic guest, Mr. Ed Poteat. Ed, how you doing, man?
Doing well. I'm doing well, John. Very well.
Very cool. Very cool. Andre, how you doing, man?
I'm doing very well. Thanks for asking. Really excited to jump in here. I mean, I've been hearing about Ed for many years from you. And I think it'd be really helpful if we kind of start with Ed, how did you get into real estate?
Um, I grew up in Harlem in the 80s. So I tell folk if you ever saw the movie New Jack City,
Yes.
that's actually how Harlem was. It wasn't, people thought it was more dramatic than how it was. It was actually kind of nailed it. Um, and so I got the benefit of going to college. I went to Yale, came back home, and said, how can I participate in kind of building up Harlem, right? I had heard about it, was great, but the Harlem that I grew up in was kind of crappy. So I stumbled into affordable housing development. I'm just trying to figure out how do you develop buildings on the block. And then, probably by my late 20s, I realized you could do well and do good at the same time. And so I'm still a bleeding heart liberal. But that also helped me have a career in affordable housing.
When you were going to school at Yale, like how did that influence your thinking about how, you know, cities can be built, like housing and economic opportunities be put together? How did you bring that, I guess, framework back into the work that you're doing?
I think going to Yale and being an economics major um, kind of helped me see the bigger picture a little bit, right? Uh, you ask anyone that grew up in that time, you were focused on your block, right? You were focused kind of on your little area. And going to Yale helped me see that, this was happening in many cities around the country. This was happening throughout many parts of New York City. It wasn't just Harlem, but it was Harlem. It was the South Bronx. It was Southeast Queens. It was many parts of Brooklyn. It was a lot of Staten Island. And so trying to understand solutions that would solve that on a problematic, solve it on a way of scale because it was needed.
So before we jump into your development career, um, after college, you got a job at a big bank. Is that correct?
Yes, I worked on Wall Street for 18 months. Worked for JPMorgan Chase right before they merged. The chemical had merged with Chase and formed Chase Bank. My last year is when JP Morgan merged with Chase, and you have JP Morgan Chase. So I worked 18 months on Wall Street, and I worked for a year as a commercial lender. And then at the ripe old age of 26, thought I was smart enough to go out and become a affordable housing developer.
Love it. I love it. So, and I tell people your story all the time, Ed. So, would love for you to share it. Um, New York City created a public-private program that helped entrepreneurs solve the city's problem. You participated in that in a big way. If you could explain to folks, the neighborhood entrepreneurial program, as well as how you formed a partnership with another minority firm. Can you talk about that, please?
Sure. So I'll talk about the second part first.
Okay.
Besides going to Yale, I had an opportunity to go to Morehouse College. And on the low in the early 90s, and they're actually starting this back. So shout out to Morehouse College, shout out to the real estate program that's restarting there. They had two Black professors that were churning out um, young Black men who would be interested in real estate because they were great teachers. Morehouse had
Mhm,
a great undergraduate real estate program. So it's
mhm.
the semester at Morehouse that made me say real estate is a career that I want to get into.
Mm.
So now coming back to Yale, I'm in my final year, and my frat brother, a really interesting story, a guy named Robert Horsford. We were having a think we were having a step show at Yale, and Rob came back to visit. And so we were just kicking it because he was a noob from Brown, I was a noob from Yale. And he was like, yeah, that my family is in real estate in Harlem. And I was like, that's cool. I think I want to go into real estate, right? Now, mind you, I'm the
That's
first
awesome.
in my family to go to college. I think the first in my family to graduate from high school. So I had no concept of business, entrepreneurship, none of that stuff. I was just happy to be at Yale, right?
Hmm.
But I was like, I think I want to go into real estate. She was like, cool, why don't we kind of link up, right, when you graduate and let's see what happens. His family had owned 4 brownstones in Harlem at that time. And so we started off saying we're going to be property managers, and we had 16 units. We're going to build from there. And so I can't make this up. Working, I had my job in banking. Rob was an engineer at AT&T, or the predecessor. We were humping and losing money year in and year out. And finally, 3 years in, we were um, losing money every year, and said, listen, let's just give it a whirl, right? Let's leave our jobs, because maybe if we spend more time doing this thing, it'll get better, right? And if it doesn't, let's just go back to grad school, right? And call it try, we're still in our 20s, right? So it'll be a good for the asset. That year, actually years before, a couple of years before, HPD had came up with this program called the Neighborhood Entrepreneurship Program, where they were taking small property managers who were in the boroughs, so South Bronx, Brooklyn, Harlem, and saying, we'll train you on how to be developers because we have so many assets. Can you imagine that? We have so much vacant property. New York City was the largest landlord in New York City in the early 90s. And they had tons of vacant lots, buildings, blocks everywhere. So they were like, we need people dumb enough to go into these. It makes this up. We need people dumb enough to go into these dangerous neighborhoods who have a vested interest to kind of deal with the stuff. We'll teach them how to develop, give them the money. And so Rob and I were like, let's apply for the program. What do we have to lose? Right? Because we were losing money year in and year out managing. I think at that point we had 50 units, right? We were growing, still losing money. We got 6 buildings in Harlem on 149th Street. We learned about development. We learned about the tax credit program. I was a banker, so I got the concepts pretty fast. And Rob learned about building because he was an engineer, so he got those concepts pretty fast.
Hmm.
That was it. That was it. And so then from there, we were able to build. The city liked us as a vendor. We focused on being a vendor for the city. And by before the Great Recession in 06, 07, 08, we were on our way.
That's really amazing. I mean, you know, those types of opportunities, it sounds like it was such a pivotal time for the growth and development of your company. I'm curious, like how involved have you been in the community outside of real estate development, like sitting on boards, or being involved with other nonprofits?
Um, I take civic engagement very seriously. Gerard knows, as a hobby, I'm in politics, right, which is a weird hobby. I just finished serving as a council member in the great city of Mount Vernon, New York. For your listeners, it's a suburb outside of New York on the northern edge, which is where I lived for a while after I left Harlem. Um, I was very active in Harlem. I sat on Community Board 10 for a while in my 20s and early 30s. Served on the Board of Urban Pathways and a few other organizations. I was a member of 100 Black Men um, about 20 years ago. So
And how has that made you a better developer?
interesting. I think all of it, right? I was born and raised in Harlem. I was born and raised in Mitchell housing. Um, uh, and there were a lot of things that happened where we had fires in the building. I had friends that died from the fires in the building. So I was always very sensitive to the power that landlord had or a landlord has. and the life of the people living in the building. So there's two sides to being a landlord, right? One is that we got to make profit. You got to make money. You have investors who have very little patience with you not returning their capital and the interest on that capital on the debt and equity side, period. So you have to be successful in that way, first off. But if you can get that right, you also have the opportunity to have great impact, I think, on the lives of tenants living in your building. And that part that I resonate with, because I grew up in a building and that we were like, wow, we wish the landlord just cared about us a little bit more.
So you formed this partnership, um, grew a very substantial portfolio, and at some point you decided to create Carthage Real Estate. Can you tell us a little bit about Carthage, kind of the birth of the idea, kind of a little bit of your evolution over time?
Sure. So the Great Recession hits, and for your listeners who are under 40, you won't remember it, right? Because then you were 20 at that point, right? So it's, folk keep talking about the Great Recession. What is this? Um, the banks just stopped lending to real estate, right? So the vast majority of real estate transactions involve some form of debt. So imagine a 2-year period where the banks were like, we're not touching real estate, which meant that you couldn't transact, you couldn't sell, you couldn't buy. So it really froze the market. And there was a lot of distress from what's called commercial mortgage-backed securities. So, but those of us other 40s, those of us above 40, it was a very dramatic time. Our business was over leveraged. We made a bunch of classic mistakes. We cared more about revenue than bottom line profit, which feels good until then you wake up one day and your expense load, even though you're driving in revenue, your expense load is greater than your revenue. So I had to learn that lesson hard. So we broke up our business. And I started Carthage saying, okay, I learned from those mistakes. Let me, besides doing public work, let me also figure out how to bring in private capital to the business, because affordable housing is also a good business. It's a very good business. You have, if you get it right, decent profit margins and very low risk. So capital looking for decent profit margins but very low risk would love affordable housing. So going out on that thesis, I said, okay, let me go out and try to find that type of capital to grow my business and make sure next time if there's a crunch, I'm not dying because of it. And so Gerard, that you joined me at that time, and we had some bumps and bruises, but learning that lesson, we ended up learning from what we did in Jersey, which I didn't.
Yeah.
But then we closed on a very exciting project called Marcus Garvey Village, which I think is a catalyst here in Central Harlem. We're building 500 apartments right in the heart of Central Harlem. And we've been rocking and rolling ever since.
And you skipped over one piece I would love to highlight. Um, that when I first came to Carthage, and I was there for about 8 years, Ed and Dwayne was like, "We do not do new construction, Gerard. We only do preservation here. Don't even think about it." And we did do some good preservation deals, but Ed has also done some exciting new construction deal. For our listeners, like, can you talk a little bit about kind of the pros and cons of preservation versus new construction?
Sure. And I've had the benefit of really doing both. So it's been fun to see both sides of the business.
Right.
Um, it's varied, right? You do preservation, you have to be stronger in property management because you're dealing with older buildings. So you have to have that real expertise somewhere on your team. Um, you also have tenant relations that are in your face, right? Because you're interrupting the lives of these tenants when you're doing preservation. So you have to have expertise. Um, you don't need quite as much equity, which is a good thing, because there's various ways to fund that deal, and you're buying into existing cash flow. So you can lever those deals more because you're buying into an existing project. It's less risky because you don't have construction risk. The building's there. So your lenders have more confidence that you can renovate the building because it's not that hard. So those are the pros and cons, I think, of preservation. Ground up is interesting because you have to have good engineering expertise. You must have good engineering expertise. You can be murdered on a ground up deal if you don't understand engineering. You don't have to have kind of strong property management because it's a brand new landscape. Right? So all the tenants are brand new. But it's a little more capital intensive than preservation. So you better have a strong equity partner or have funds backing, because mistakes made, issues that come up in a ground up deal could kill you if you don't have capital to kind of help you get through those deals. I think those are the key differences.
As you think about like your career trajectory, doing preservation deals, doing ground up deals, and you think about the landscape today, what's making it, what's different? Is it the capital side is more challenging? Is it the policy side that's more complex? Like, where are you seeing opportunities for new people who are jumping into the space?
Oh, man, so I'm going to answer that question in two buckets. For those of you who are in the New York kind of metro market, it's one answer, which is the barriers to entry in New York are definitely much higher, much higher than 20 years ago. And that came from a conscious decision, I think, under the Bloomberg administration, to make sure that they were meeting their goals and not so much focusing on encouraging developers to grow. So if the goal of the city was to bang out 20,000 units in a year, it's far easier to find 10 large developers who are going to deliver those units than to deal with 50 developers that some may be weak and some may need TA or don't have a big infrastructure in backup. So that forced developers how to grow pretty fast to meet that or not be active in the field, creating high barriers of entry. I think if you're not in the New York kind of metro market, it's exciting times, I think. I'm in New York. I've done Jersey, but I hear a lot about what's happening down in Georgia, Atlanta. Gerard tells me about what's happening down in Florida. I think other states are focusing more on affordable housing than they were 10 years ago.
Like I'm in Los Angeles. We have a housing shortage here that's astronomical. Like in Los Angeles County, we have a deficit of 456,000 units that need to be delivered. And at the same time, a lot of institutional capital has gone to Florida, Georgia, et cetera. So we're kind of in this situation where that technical assistance is very important because we need to build up that emerging developer class.
Mm-hmm.
So I'm curious if you were in a position to kind of approach it from this other angle. How would you be thinking about building up that class?
You mean building up TA for emerging developers?
Correct.
There's great groups, LISC is one of them, Enterprise is another one. They're pretty strong around the Northeast. I'm not sure their presence in California. But those are groups that I would lean on, right? Or they're kind of siblings on the West Coast. Because those groups are built to provide that type of TA. And you could pressure them a little bit if they aren't. Leaning on government entities, less so, because bureaucrats have a lot of things that they're working. And politicians aren't in a position to execute on them, per se.
So Ed, you've had an incredible storied career. Now, as you're you're sitting in your beautiful building now in Harlem, which is a beautiful building.
Thank you, brother.
And we could have a whole episode on telling the stories of Marcus Garvey. So many good stories. But if you could talk to the scrappy 23-year-old Ed Poteat who's running around trying to figure it out in New York City, what advice would you give that young man today?
Love the process. I think that's the first step. Love the process. There are easier ways to make money than doing this. There are, right? So if you're doing it just for, I want a nice car, I want, make $1 million a year. If that's what you're doing it for, you'll run out of steam, because it's a tough business. Um, so love the process, love looking at architectural plans, love looking at Excel spreadsheets, love dealing with tenants, because you actually get to help a few, right? That's the part that I love. I love seeing tenants walk into one of my buildings and they're dealing with their life, right? Like they're Easter Sunday, they're worrying about, mom and dad coming over, right? And I'm like, wow, like you weren't even here 2 years ago, 3 years ago. Now you have a whole life here. And I help them. That's kind of cool. I would say find a capital partner and focus on that first. We so often want to get the deal done. So I found the deal and want to work on the deal. Focus on the capital. Real estate is capital intensive. And what often happens is you bust your hump, you find the deal, and you need, call it 100,000, 200,000, $1 million, whatever it is. So now you turn to the markets to go get it. And you find the deal, but you don't have a lot of time to close on it because you found that. Right?
Right.
It's a good deal that other people also want. So you got to move quick.
Right.
Capital can smell that, right? So that they can smell that, so that they can either sense that you're
The desperation that you have.
right. They can sense that. So they'll sense you're either inexperienced and there's too much risk here because you're inexperienced. You haven't done this before, or they're predatory, right? Which is I can take 90% of your upside because you're so desperate for the capital. So focus on getting the capital first. Have people believe in your story. Have people believe in you. And that takes a while. It takes a year. Maybe it takes 2 years. But get the capital right. Have those funding sources in your pocket and then go out and find it.
I love it. I love it. Ed, thank you so much, man. We really, really appreciate you coming and talking to us today.
Best of luck, y'all. And listen, good job for doing this. Thank you for bringing up the next generation of Black and brown developers. We need y'all. A bunch of people helped this dark-skinned Black boy from Harlem when I was young, and I knew nothing. And they're like, I want to help you just because you seem like you have some energy. So thank you for doing this. Any way that I can help, please let me know.
And where could our listeners find you on the internet?
Oh yeah, you can find me at ed_Poteat on Instagram, edpoteat.com. I have a website. I'm on LinkedIn under Edward Poteat, and would love to hear from you.
Amazing. Thank you so much, Ed.
Thanks.